The cost of butter is up almost 50%. A 1 kilogram block of cheese up almost 30% to $13. Food prices are skyrocketing again, and some are picking inflation. The general inflation rate will creep over 3% again before the end of the year. So what does this mean for your mortgage? Could the price of your groceries end up costing you when you go to pay for your mortgage as well? Nick Tuffley is the Chief Economist at ASB and is with us this morning. Hey, Nick.
Good morning.
Good to have you here. First of all, on the food price inflation, what's driving it? Dairy? Well, it's all the stuff we need.
Yeah, well, a lot of it is around dairy and red meat in particular, because we're getting really strong export prices for those at the moment. But there are other factors too. The seasonal price of vegetables in winter seems to be unusually strong this time of year. Even things like breads and other cereals have been going up. So it's not just that sort of dairy and red meat story. There are some wider increases in food prices.
Why are veggies more expensive than what you would seasonally expect?
Yeah, well, we do go through a bit of seasonal variation, and look, sometimes you can just simply get a bit of volatility in the short term. Winter's not a time where you get a lot of your summer vegetables, so they tend to be a bit more expensive. So it seems to be a bit more of a push at the moment in that area. So that's not something that will generally last.
Okay, so when do we start? When does food price inflation start coming down or being more reasonable?
Well, I think when we get through into summer, we should have the veggie side of it being a bit better. We are likely to still be paying relatively high prices for our meat and dairy, but they may not continue to go up in this sort of way that we have been seeing. So that will stabilise, but it still means we're likely to be paying a fair amount for a block of cheese for the time being. Okay.
And you put out this economic note yesterday, which I was alarmed by, only because it's got inflation going above the RBNZ band again to 3.1%. Can you tell us the thinking behind that?
So we're going to be up to 2.8% in our view when we get figures for the second quarter released on Monday, and then a further climb over the third quarter. A lot of it is this temporary things. It is the food. It's also things like electricity, where there's extra line charges, gas charges are high, and we'll also get the usual sort of lift in council rates coming through. Now, some of these lifts we don't think will be here for the longer term. Some of it's just not related to capacity pressures, which is what the Reserve Bank is going to be worried about. So it should be relatively short-lived. And the Reserve Bank's focus is really, where's inflation going to be in 2026, 2027, and it should be settling down by then.
Okay, so we should continue to see easing on their OCR from the Reserve Bank from next month?
Yes, we expect one further cut. Beyond that, a lot of question marks, because it gets into Donald Trump. He's got more than just his ankles to worry about. He has his tariffs to worry about too. But the Reserve Bank will be watching our behaviour. If we start seeing food prices being up for a bit, will our behaviour change? Will our shifts in what we think will happen with wages and prices start to influence inflation itself?
On wages, we're always told, oh, wages are ahead of inflation, so everybody should be feeling richer. I mean, I don't know anyone who does feel richer. Presumably some people are getting pay rises. So do we risk inflation going ahead of wage growth at all?
Well, in reality in the short term is it will be biting into those wage increases. Wage growth has slowed because we have seen people pull back from hiring, and we do have a slight rise in unemployment that's been happening. So in the short term there is a little bit of pressure for some people, particularly low income people, where food will be and energy will be a higher part of what they spend.
In general, how much has our disposable income gone up by? Is it racing ahead? Because it doesn't feel like that, does it?
No, I think it doesn't, but because what we've seen is very strong inflation. We've also saw some quite strong wage inflation, particularly a couple of years back. So look, we have started to get ahead of prices, but this is this temporary impact where we've just got slightly above average inflation that we'll be experiencing, particularly in the second half of this year, and then next year back to more normal times.
All right, that sounds like something to look forward to. Nick, thank you very much for that. Nick Tuffley from ASB with us.